All right, hey, good afternoon, everyone. Markets just closed here on Friday, so let's kind of review the week and see exactly where we ended up closing. Let's go through multiple time frames, weekly, daily, and some of the shorter term stuff. So fundamentally, the main drivers for the week are the prediction or the anticipation of the Pro Farmer Tour next week, and a lot of the crop tours happening across corn and soybeans. And then on top of that, we have volatility in the Black Sea. We have dryness in India to the point that they're looking at importing almost 350 million bushels of wheat into India. We have dryness in Australia and we have dryness in Argentina, which all are bullish factors pushing into the wheat market. And it's been kind of confusing as to why wheat has been ignoring a lot of those bullish drivers for the last several days, because it's not new news, right? Certainly Russia's not new, India's not new, none of that stuff is new, but the market's just been being pummeled in spite of it until today. So now we have a nice double low here in wheat going back to the May low. We have a nice reversal pattern right here with a big engulfing day that took out 1, 2, 3, 4 prior closes. And on a weekly basis, let's head out to there so you can see what this looks like. We didn't quite get a full reversal here on a weekly basis, but we did end up with a nice long lower shadow and support along the same level that's been acting as support for more than 18 months. So hopefully we come in Sunday night and wheat is just up and out of here, and we should come all the way back up and test the mid 8s to the 875 area. And then if we can get back up above this high from late July, then the upper end of the range is certainly back in question. So back to the daily chart, what does that look like? Well, the 875 level is all the way back up to this blue line right here, which is the origin of where this big decline really began and got underway, right? So if we can accelerate up from here and break this line, then all signs would point to higher wheat prices. I don't know what's going to drive it if that were to materialize, but for now, that's what we're looking for. So we'll take it one day at a time. I mean, first we've got to clear this resistance. We've got to clear this resistance. We've got to get back up into this area and clear resistance all the way. So the market's got a lot to do, but the recipe is present for it to happen. You've got bullish fundamentals and a trade that's extremely short. So that can be like throwing a match on gas or lighting gasoline on fire, right? So you could really explode up out of here quickly if the trade decides that it's wrong. One of the things that will help decide that is what's happening in the corn market, right? So corn got pummeled earlier this week and ultimately came into a new low, and it has reversed from it and has started to work higher. I would have liked to have seen a close back up above 497 today, because that would have completed a full bullish a reversal on the weekly chart, but it didn't quite get there. Instead, we're left with what would be considered to be a baby hook, right? So we do have a reversal, but if it had closed above 97, it would have been a double close, and that would have been really a positive sign. But as it is, we're going to stick with, hey, we're more bullish than bearish because there's too much uncertainty in the world with on the supply side, and there's too much bullishness around the demand side for us to turn overwhelmingly bearish from this level. If we look at some of our oscillators like the MACD and stochastics, you'll see divergences here on the weekly charts. So these divergences are in effect and in play and have confirmed here strength above today's high at 495 should accelerate a move at least back up to the gap area here at 527, and then from there we'll have to see. If we come back to our daily chart, you can see these divergences very pronounced across all of the oscillators that we like to look at, including force index. So all of these divergences are really solid, something that you can't ignore. So we're bullish. We're looking for a move above 507 and then 527, and then if we're able to push up through there, then we're going to be looking all the way up here to the 630 mark. What would drive that? smaller crop, more demand. We'll just have to wait and see. But the recipe is in place to make that happen. So we're going to be really patient, and we're going to watch it, and we're going to let it unfold. Okay, soybeans too can really be helpful here for higher prices. We really like this action so far. I want to drill down to the 240-minute bar for you to show you what we don't like about it yet, which is this right here. So what has us a little bit nervous about wheat or about beans is that this corrective move here that we've been in this week from the low to the high is contained within parallel lines. So if you look at the move from the high from late last month and the move down here and label that as a 1, this corresponding action here could be a 2, which is something that we don't like, and we really would like to see this upper boundary of this channel broken on a definitive basis here on Sunday night, so that we can just put that argument to bed, and we'd like to see this gap filled. If those two things can happen, then what we have here is not a wave 2 to the upside, but we have a wave 2 to the downside. Okay, so now I want to focus on the back on the 240-minute chart, because I can also make this argument that this entire move was also contained within parallel lines, right? So you can look at markets two ways. If you have a bearish lens, then you're looking for things that make you think the market's going lower. And a big problem for that argument is that this move to the downside is all contained within parallel lines, and it failed to even challenge the midpoint of this downward base channel. Now, we haven't done enough to break the argument the other way yet from an Elliott wave perspective, but Sunday night, if it stays hot and dry and this market thinks that the yield could be impacted, then we're up and out of here and we're gone. And so I think that the best argument is that we're actually in a bullish wave 2, not a bearish one. And so we've got to give it a lot of room, a lot of patience, and hold those long positions, because if this is a wave 2, then we are headed much, much higher. Where might we go in beans? Well, let's look at that. So if we're in a wave 2, then the first target for wave 3 is up here at 1490, and then your secondary target is 1524. But your primary target is the 2618 up here at 1668, and above that up on top at 1812. And what would do that? Well, a yield of 49 would probably do that, because that would take our carry out to extremely tight levels that we can't withstand. So beans would have to ration. I'm not saying that's what's going to happen, but I'm saying that that the catalysts do exist, the wave counts are right, and the weather pattern and everything else would all lean towards this is a bullish 2, not a bearish one here. But we're going to be respectful of the market. It can do whatever it wants, and it's a valid argument to say, nope, this is all a wave 2. We're going to reverse and head lower. Supporting what I think is the bullish argument is the fact that we've held the daily cloud, we've reversed right on top of it, and up we go. This is a very bullish Ichimoku signal. If with a bullish leading edge, the 9-day is turning back positive. We want to see us explode up through the 26. We want to see these moving averages cross, and then ultimately higher prices come from a move back up here. So lots of room, lots of opportunity, lots of different things to think about with these markets. You know, there's no way to know what will happen on Sunday night until Sunday night gets here and we get through the weather, and we get through the weekend and see what the weather's doing and see what happens in Russia and Ukraine. So with that, remember, there is always risk in trading futures and options, and you should only do so in light of your own financial condition. I hope you guys have a great weekend. We'll be back with you Monday after we see how the markets trade. But for now, we'll be patient. Have a great night. See ya.